Today, I want to take a closer look at two companies in the AI semiconductor space. First, Nvidia. The company is expected to report earnings tomorrow, and in the past few days, we have seen numerous analysts increase their price target of Nvidia. Outside of that, we've also seen lead times for the H100 go down. So I want to take a closer look at what this might mean for the overall stock and what we should pay attention during earnings. Then I want to take a closer look at Supermicro. Supermicro was down a nice amount, and from its peak, the stock has pulled back a nice amount as well. So I want to kind of talk a little bit about that and just share my overall thoughts on both these players. So let's get started with today's episode. For those not familiar, my name is Jose Najarro. I spend way too much time reading about the semiconductor market and the AI market, but thanks to that, my education and work experience, I do believe I have created the #1 semiconductor podcast for investors. So let's get started with today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's start off with Nvidia. Today, it finished the day at $694. It was down 4%. I do believe at one point today, the stock was down nearly 6%. We see a lot of other tech players down as well. We can see AMD was down roughly 4.7% today. And we definitely see kind of redness across the map. The only one that was green was Intel, because there was some bullish thoughts about their CHIPS Act that we kind of talked about in the previous episode, but Intel was up a nice 2%, while most of the other semiconductor places were down. Now, Supermicro, right? This one has seen quite a pullback. I mean, at one point today, it was sitting at below 700s before pulling back up, and is now sitting back to that close to 800 price point, but the stock was down roughly 2%. I think it's insane, the movement that this company is seeing, but we can see from its overall peak that we did see in February 15th or so, the stock is down roughly 21%. Yet year to date, the stock is dominating up 176%, roughly 176%. At the end of this episode, I want to take a closer look at kind of valuations and just share my overall thoughts on this stock. So first, with Nvidia, I want to say on February 19th, we did hear that HBC raises their target ahead of earnings results. They raised their price target for Nvidia from $800 to $835, renewing its buy recommendation. One of the things, though, it does seem like the analysts, while they are bullish in price, as we saw the price increase about $35, they are kind of giving a little bit of warning that they believe that the company will no longer excite kind of market forecast in the upcoming quarters in forms of guidance for numerous reasons. One is maybe we might have hit a peak in demand for AI solutions to some extent. It doesn't mean demand is expected to drop, but at least peak. It could stay flat at these levels. The other thing is, right now we are seeing a lot of price targets increase the expectations for Nvidia. I covered their earnings a few days ago, so make sure to watch that episode there. But this analyst does believe that, hey, look, so much excitement is coming from analyst sides that it will be very, very hard for Nvidia to kind of meet some of these expectations or blow it out the water like it has been doing in the past few quarters. We saw another analyst coming out from Baird. They reaffirmed their positive stance on Nvidia, raising their price target to $1,050 from previous $750, while maintaining an outperform rating. The overall company mentions that, hey, look, they indicate the enterprise customer momentum is accelerating. We've seen that with CapEx and all the big players spending tons of money. The other thing, they do mention two bullish things. First is the Blackwell architecture, which is the B100. We are expected to hear about that during GTC. So there are a lot of products that I believe we should be already excited about prior to GTC. And I know so many people are saying, hey, look, GTC is going to be a game changer for Nvidia. Not necessarily the case, because as investors, we already kind of know what kind of products they're going to announce. I mean, we already kind of have their architecture and roadmap right here that I'm going to pull up. So to some extent, it's always good to understand that unless we hear about some new product that's not in this list right here, then maybe the stock price won't move too much from GTC and from the Black Blackwell architecture. But they say, hey, look, Blackwell architecture is going to be a huge boost in performance. So obviously that can be a catalyst for the stock. The other thing is they suggest that NVIDIA's Grace Hopper 200, which is the mixture of their CPU and their GPU, is performing substantially higher than that of an x86 processor and an H100, which is leading to increased engagement with hyperscalers. We already saw that the Grace Hopper 200 is being offered. It's going to be offered in AWS back in November. So I do believe this one is right. I do believe right now investors are not paying much attention to the CPU product, but that's something that can be a big win for NVIDIA, and one way they can kind of beat expectations. The final price target was Raymond James. They increased their price target to $850 from $700. And we've seen a few more this week. Overall, very bullish sentiment for NVIDIA. Now the question is, hey, look, is NVIDIA priced to perfection? In all honesty, I personally, I want to say no. But I don't know if I'm just being bullish biased right now. I do believe there's a lot of opportunity to grow, and we are hearing and seeing AI evolution continue to grow right now. So I do believe there's room for growth here, but it's all going to have to depend on the guidance the company gives in this earnings call. Like I mentioned, make sure to check out that video for a full, I think it was an 18-minute video of everything NVIDIA has announced this past quarter and everything we should kind of keep a closer eye on. Before I go on with this episode, though, make sure to hit the thumbs up, guys. We're hitting 36,000, hopefully by the end of today. Thank you guys so much for the support. Tomorrow, I will be doing NVIDIA's live earnings on a live stream, so stay tuned for that, and appreciate all the support. If you want to support the channel a little bit more, check out my special offer at fool.com/Jose. Now, the final thing I want to take a closer look at before I look at valuations for NVIDIA Supermicro, we are seeing that NVIDIA has seen is reportedly seeing a huge decrease in their GPU lead times, right? So back then, lead times used to be nearly a year, almost 11 months, maybe 10 months, but it has dropped to roughly 3 to 4 months. And this can actually be seen as both a bullish and bearish case for NVIDIA. The way it could be a bullish case is, right, we know NVIDIA has had a huge pent-up demand. I do believe if these supply chain issues have been fixed, we're going to see NVIDIA completely, if these lead times are true, right? We have to hear from NVIDIA. But if these lead time reports are true and they're shortening that much, I do believe in the short term, so for this quarter and for next quarter, guidance are going to beat analyst expectations. Now, though, what we are going to have to keep a closer eye on is are these lead times going to cause a bit of a weakness in demand for the rest of the year, right? We should be expecting sequential growth at least for the next few years, for the next few quarters here, thanks to the overall AI demand. But with this supply chain getting a lot easier, is the demand going to just be forefronted right now? And then we start to see some slowdown in the second half of the year. So that's what I do believe investors are going to be very mindful during this earnings call. This one is one I don't really have an answer for. And I do believe it's going to dictate a lot of what we're going to see with the stock price action. If this lead time is true, though, I do believe it bodes well for Supermicro. One thing that we heard from Supermicro during their earnings call is while they are working at full capacity based on their supply of AI chips from Nvidia, they're not working at their full capacity in forms of manufacturing capacity because of that supply constraint market. So if these lead times are getting a lot better and a lot quicker, then I do believe Supermicro can outperform and be overall guidance again in the forefront. Now, I want to take a closer look at PE ratios for both these companies and kind of share my overall thoughts on valuation. So right now, forward 1 year, which is about 24 months for NVIDIA, its PE ratio is 27. I personally don't believe that's crazy for what the company does. Now, Supermicro's PE ratio forward 1 year is 27, pretty much same as NVIDIA. But I do believe their forward 1 year is about a year, and it's more like a year and a half because they're currently in quarter 3, so about a year and a half, yeah. But to me, I'm personally, based on the business, I would rather pay a 27 forward 1 year PE ratio for NVIDIA than Supermicro. I believe Supermicro has maybe not as heavy moat, not as heavy pricing power as Nvidia. So for that reason, I wouldn't put them in the same valuation chain. Obviously, if Supermicro was a lot cheaper, like it was earlier, that story would be different. But me personally, and again, this is just my overall thoughts when I'm looking at forward PE ratios. Let's say a company like Microsoft. Microsoft has huge moat, has huge opportunities with AI. Is trading at forward 1 year PE ratio of 30.31. So for me, not only do I look at valuations, which I do believe is very important, but I also tend to look at what the business does and the kind of opportunities they have and what kind of competition. So, because I personally believe that Supermicro, while it is a great business, I don't believe it deserves to be valued in the same time frame around the same levels as like an Nvidia or a Microsoft. Let me know if you guys think my thinking is wrong. And obviously, this stock has kind of ballooned in the past few days. But right now, personally, not adding or not purchasing Supermicro. I don't own it. But I definitely want to hear from you guys, Supermicro. Do you believe these valuations are still very, very cheap, even though they're getting closer to some of the big tech giants? So take care, have a good day, and see you next time.